right, welcome everyone to our LPL Kingdom Advisors bi-monthly study group. Today is Wednesday, September 16th, 2020, and we again have the privilege of having John Silverling from the Christian Investment Forum join us, along with another special guest who he will introduce here momentarily. And before we get going here, what we'd always like to do is just open up in a word of prayer. And so I'll take a moment here and do just that. Lord, thank you so much for the capabilities of gathering together in a unique space that many of us have gotten accustomed to over the last several months, but we thank you for this opportunity. We thank you for each individual on this call, and I pray that you will open up their eyes and ears and minds to what is shared today, and that we can use this information to honor you and to glorify your kingdom. We thank you for the time and effort that has been put into the presentation today. And we pray all this in Jesus' name, amen. All right, thank you very much again. What we're gonna do, what you're looking at on the screen here is probably the best single place for anyone to go and find out information about our LPL Kingdom Advisors community. That's what we are calling ourselves. We are tightly connected with the Kingdom Advisors organization, but we are separate from them. And we have a website, we call it a microsite, that is hosted on the kingdomadvisors.com URL, and all you have to do is put a /LPL behind that, and you're going to get to this website here. We keep this updated pretty tightly. We actually have a few special announcements today that we're going to tell you about that have not been uploaded, but one highlight that I want to mention here is this is where you can go to listen to replays of previous calls like this one, or our quarterly inspirational calls that we have had for the last several years, every 3 months or so, and where you can register for future events as well. There are information about different ways to connect with us. We have ways to contact us, how to get in touch with us. There is a small resource library currently. We continue to build that up. And the one item I want to bring to your attention here is just on the front home page, right in this gray bar, that recently Kingdom Advisors is creating a special offer for LPL advisors on a discounted price. We're going to save you a couple $100 in that regard. That's assuming that you sign up here in the next few weeks, next month or so. And in addition to that, we are trying to get 25 LPL advisors to sign up for this designation in the very near future. So additionally, we have a new LPL Kingdom Advisors Community Fund that has recently been established. And because of that, we are also offering a 50% scholarship for anybody that does sign up for the CK designation. We will help cover the cost of that. You can get more information about that by clicking here. Randy Glass will have information. He is with Kingdom Advisors directly, but he will have information about all of these discounts, how you can sign up. The other thing that I want to bring to your attention is this Kingdom Advisors Community Fund. The LPL-KA Community Fund has recently been set up. So although there is no cost to join our LPL-KA community group, many people have asked in the past how they could support us financially through different ways. And we have recently set up a donor advised fund. If anybody would like to make a financial contribution to our community, you can now do that through the donor advised fund that is held at an organization called the, I just blanked on it. Wow, stage fright.
The Signatory.
The Signatory, thank you very much. All right, the voice off in the distance who helps me out. The Signatory. So if you have more information about that, you can reach out to Ward Keever at this phone number over here, on the contact us side, or any one of us on the community board as well through these emails. So with that information, I'm going to turn this now over to John and let him introduce our guest speaker for the day. Thank you. John, go ahead.
Well, thanks, Aaron, and really, it's a great pleasure to be on again today. I wanted to also reinforce that idea about that donor advised fund. The Signatory is a great organization. They've been a member of CIF, and the unique thing about them certainly was their focus on investing the money that's in their hands while they have it before it gets donated or before it gets sent out to a charitable cause. Is invested in BRI strategies. So they are fully aligned with CIF and with this group at LPL. So it's a great joy to hear that that's happening within your guys' side. So I don't know if we can have, Michelle, if you can have Jordan share his screen next, but I'm gonna do a short intro and then I'll turn it over to Jordan, who will take the majority of the time today.
Hey, John, excuse me. This is Ward.
Yep.
Just before you turn it over to Jordan, we still do not have audio for Jordan. So, Jordan, you are logged in as a participant, but not as a panelist. So we need you to log in as a panelist. We cannot give you screen sharing capability unless you are logged in as a panelist.
Okay. So as Jordan exits out and restarts his thing, thankfully here I have a couple of minutes to spend before we jump into Jordan's presentation. The biggest thing, and there's a slide on it, but I will not go through it, and that is with the Christian Investment Forum. We may have said on the last call 2 months ago that recently we've begun to have a closer and tighter relationship, a partnership really, with a faith-driven investor and faith-driven entrepreneur, a new movement, a new organization that was recently launched. I'm excited for what they're doing in this marketplace and what I see them looking to do in the future. And they have a conference coming up, so I want to mention it again. They have an FDI conference, Faith-Driven Investing Conference, that started as a live-only event in Dallas, Texas, then switched to a live and online event, and then switched to an online-only event in only several months. So they've been working feverishly to put that together. It's a great lineup of different people who are participating, and now without it being in person, it's much easier to attend because it's a lower cost and there's no travel involved. They've also opened up to Friends of Christian Investment Forum a 35% discount to their the nominal registration fee for the event, which takes place next Wednesday, February 23rd. And so if you are interested, you just go to faithdriveninvestor.org/FDI conference, and the discount code to use when you go through the registration is the word watermark. WATERMARK. So watermark is a coupon code to use to get that 35% discount. I hope many of you or all of you will be on that and hear from so many wonderful speakers about the broader community and landscape of faith-driven investing and biblically responsible investing that we're all a part of. So let me begin, I guess, just an introduction to today's call, and then I'll turn it over and introduce Jordan. But sometimes in this hyper-partisan and hyper-politicized environment that we're dealing with, topics and titles are forced into kind of this black and white decision, choosing one side or the other without any consideration for the nuance that is just about in everything we see and touch in this world. Especially in this kind of a messy time, we really do kind of like things that are a simple yes or no, one side or the other. Unfortunately, that's not always the right answer, and regrettably, the same thing holds true in investing. We hear a term and we have an immediate reaction to it, a connotation that exists in our minds. And too often it's an unalterable opinion that we have. For example, climate change, diversity, stakeholder theory are at their core, they're ideas that should resonate with Christians, especially evangelical Christians. But too frequently, the concepts are seen as progressive, and progressive in a bad way, or hyper-liberal, and anti-capitalist even. And since these terms are part of the fabric of ESG investing, the entire topic is thrown into that same bucket. And often that bucket is a trash can. And we lose sight of where we are together in this journey. So today's call is meant to highlight the many reasons ESG and BRI are closely related, and how we as Christians can use the interest that exists in ESG today to grow the field of BRI as well, and to bring value to your clients and benefit your own business. So I'm pleased to introduce our panelists for today's call, Jordan Izumi. Jordan is Vice President with Crossmark Global. Crossmark's origins are as a professional, or their origins are professionally managing money for the Assemblies of God denomination. Then they grew into managing other institutional assets. They also then created a set of mutual funds under the name Steward Funds that take that institutional money management expertise and make it available to individual investors. So some of you may know them, the Steward Funds and Crossmark, some may not. Something you may not realize is that Crossmark was one of the original strategic partners for Kingdom Advisors when it was just starting. They were one of the originals. So they've been supporting this cause before many others had. They're also one of the founding members of Christian Investment Forum. So I've known Jordan for years and appreciate his thoughtfulness on the topic of biblically responsible investing and his passion within Crossmark to maintain their close ties to their religious foundation of the firm. He's been with Crossmark for 5 years. Before that was actually with AG Financial, Assemblies of God Financial, so he understands the message of a values-oriented investing style. On a personal level, he's a musician. He's very involved in his AG church, where he's a worship leader, originally from Hawaii, interestingly enough, and he and his wife are expecting a baby girl to join their 2-year-old son in their family. So without going much longer, let me turn this call over to Jordan. Jordan?
Looks like we are continuing to have some audio trouble for Jordan.
Okay. Well, I can, if you would share, allow me to share, I can put my screen up there, and I can begin. Michelle, could you allow me to share?
Yes, John, you can please select the share screen in the bottom middle of your screen to share.
Yep. Sorry about this.
Hello, everybody. I apologize for
there's Jordan.
the late arrival. Is everyone still there?
Yep, we're all here, Jordan, and I just began sharing my slide, my screen. So maybe we'll just go ahead and you tell me when to forward them.
Yeah, actually, if you don't mind, to discontinue sharing your screen, John, I'll share mine. That might be a little more helpful here, if that'd be okay, and then we'll jump right into it.
Okay.
Thanks, everybody. Apologize again. Leave it to a millennial to mess up technology for us, right? Okay, so it should be showing. How's that look, guys? Do you see our 2020 Faith-Driven Investor Conference slide showing now?
Yep.
All right, great. And I know I caught some, again, I apologize, everybody, for technical difficulties. I heard that we'd already talked about the conference. I'll move forward. And I did catch, John, that for the intro, thank you very much for the kind words. Just progressing here forward to our topic today. Can you have faith in ESG? And as a bit of a play on words, really the intention is to examine biblically responsible investing and looking at the current environment with respect to sustainable or ESG investing. What are the similarities, and what can we gather from the trends, and what can we as Christian financial advisors do to to better broadcast and make our services available with respect to BRI. And I do hope and pray before I jump into this that over the next few minutes, what I prepare to share is helpful to you and meaningful to you. I know that you have taken great lengths to whether it's certification with King's Advisors or just a lot of time and prayer in your own practices to be effective stewards of your clients' wealth. And so I get hope, again, this is just one blessing, one nudge toward helping you achieve your God-given goal of serving your clients. So that said, I did want to kind of start off with a quick announcement. If you have questions throughout the presentation, please feel free to email them. John, you may have already mentioned this already, so forgive me if you did, but that can go to info@christianinvestmentforum.org. And what we're going to try to do is John and I will try to address as many of them as quickly and as thoroughly as possible if there's given time at the end of the presentation. So just to give you a quick overview of what I'm hoping to cover in the time together, one, we're going to talk about the trends. We call it trend to truth with respect to ESG. Then we're going to define ESG a little bit more and really examine the taxonomy, if you will, of the different ways that funds can be considered ESG. We're going to look at faith or BRI in ESG and how the two interact or correspond. And then I just want to quickly wrap up with a few ways in which Crossmark can help you in your journey of offering BRI investments to your clients. So I have to admit, in preparing for today's presentation, everybody, I had the opportunity to reflect back on when I first entered the industry, which was back in 2008. I'm sure many of you are well aware of those times during the great financial crisis. I recall topics like too big to fail dominating the headlines. And it's interesting to know, just a few years later, at least from my personal experience, the first time I came across a truly ESG situation is when an advisor we were working with here at Crossmark wanted to screen out. This actually was a faith-based advisor who had been using BRI products, but they wanted to screen out any banks that had received TARP money from years prior for a number of reasons that did not align with his investors' values. So I thought this was very interesting. And so back then I would have said, I would have thought ESG was just, for lack of better terms, a hippie way of investing. But I think that we've learned more since then. And I think it's interesting to see that what was more or less not talked about as much back then has really become the trending storyline, at least from my perspective. It seems like you can't go a week without seeing some kind of article on ESG. It might be daily for your inbox, I'm not sure. But here are just a few examples of what we've seen in 2020 alone. ESG investing, advisors, broker-dealers who are making ESG a priority, and even money managers taking a stance. It's quite fascinating to see that. And I think over the years, we've seen this cadence sort of progress, right? We've seen the frequency increase in terms of the news on ESG. And I think we can look at a couple of interesting examples that I think of firms that have helped establish this as a topic for not just today, but really going forward. BlackRock, as many of us know, the largest investment management firm in the world, made it very clear in the last couple of years, but more specifically this past January, that they, as a firm, were taking a serious stance on ESG. In fact, I think the quote was saying that sustainability or sustainable investing is the new standard for investing. It's just very interesting and to look at. In addition to that, if you think also that just this past week, a different broker-dealer, UBS, announced a new initiative called First Option. And what this new initiative is saying is that instead of sustainable or ESG products being something great on the side that one could consider, it's going to be the first option that they're asking their advisors to present to clients when it is suitable and when it is advisable in their scenario. And so instead of it being we could consider this, it's more of the first option they're going to bring up, because UBS has made a stance that, and saying really with their actions here, that portfolios that have ESG or sustainability factors built in can perform as well, if not better, than those that do not have these factors embedded into the process. So very interesting times that we are in. I don't think the topic is going to go away anytime soon. But as we look forward, one thing I have to admit, I guess we should pause for a minute and just look at this year. In the last few years, one thing that I've picked up on in my role at Crossmark is that when speaking to advisors, the question often comes up, where are the flows really? Have we really seen the sales go into ESG products? I get that question actually when I speak with broker-dealer platforms and program managers, when they look at our fund family and they kind of classify it as ESG and they want to know if there's really any demand there. And so it's a very interesting question to ask. It's a good one to ask. What's fascinating about this year, of all years, given what's going on in this year, a number of different angles, we've seen actually a huge influx, relatively speaking, to prior years in ESG product. Just kind of taking a step back, in 2019, which had been the best year on record, we saw about 21 billion in the US net flows to ESG mandated products across the industry. This year, in just 2 quarters, right, go up to June 30th, we saw just shy of that, about 20.5 billion or so net flows. This report shows 19. I saw another one that's close to 20.5 recently. So what we're seeing is we're basically on track to matching, if not now outpacing, now that we're in September, the flows from last year. Look at prior years. It was much lower. Something has changed. And I think the questions you could ask are why? How did this happen? And what does this mean? I think when we look at why we're seeing more flows, there's probably 2 sides, right? There's the supply and the demand. On the supply side, we're seeing more and more ESG funds come to market. I think one report that I saw is showing that 200 new ESG mandated funds and ETFs will be launched over the next 3 years. That's an estimation. And that's double, just about double the amount of ESG products that were launched in the past 3 years. So there's this major increase in products that are coming to market. You could also consider the fact that pricing has gotten better across the industry, as many of you know. But with respect to ESG, if you look back in 2013, the cheapest ESG product you probably would have found would be around 50 basis points as an expense ratio. Today, a lot largely due to passive products, you're seeing that closer to 10 bips. So there are a number of factors here with respect to the supply that's making it more attractive. Now, to look at demand, there are some very, I think, telling and some very consistent trends we're seeing with respect to what is driving the demand. First thing is clients are becoming a lot more vocal and they're becoming more aware of the topic. There are numerous citations out there, different reports talking about the rise of millennials as those who will be inheriting assets, more and more women investors, heads of households who are in charge, so to speak, of the household money, and even high net worth individuals who are becoming more aware about the opportunity to invest with values, to invest in a way that makes a difference in their world. And they're showing it, they're through surveys expressing that they want to actually invest that way. I thought something very interesting from Bank of America Merrill Lynch. There was a report or an article they issued last year called 10 Reasons You Should Care About ESG. And in that article, they essentially allude to about 80 trillion in assets are expected to either be transferred or be created by millennial investors. And if you just took a quarter of that, you're looking at about 20 trillion. It could very realistically be invested in some sort of an ESG type product. And that's about the market capitalization of the S&P 500 today. So will that happen? We'll see for sure, but it's very interesting to watch these trends and driving factors. To move a little faster on here, the green, yellow, and the darker color here, investors believe their investment choices can make an impact. More and more investors want to make a difference, and they believe that by investing a certain way, you can make a difference. The yellow area here is showing that new technology is helping to drive corporate transparency reporting. Basically, technology is better now than ever before. It's helping investment management firms, even like Crossmark, have better optics on different factors with respect to ESG about companies, and the company can choose to use that in building a portfolio. But that goes into a whole area of artificial intelligence, big data. I'm not going to go into today, but technology is really helping drive this as well. The last item here on this slide I want to share with everybody that I think is probably the one, I'd almost call it the elephant in the room, in that before, years prior, you probably would have heard, like I mentioned earlier, ESG is something that makes you feel good. You might be sacrificing returns in order to have an impact in the world. But what a lot of studies are showing, and in addition to that, investors are expressing they agree, that actually incorporating ESG factors could actually benefit performance. So there's this growing investor confidence that ESG practices have potential for higher profitability. I'll just quote the second bullet point below there. You see it says U.S. companies with high ESG rankings in the S&P 500 index have outperformed their counterparts with lower ESG rankings by at least 3% every year for the past 5 years. And that's from a study done by Bank of America. I think one more data point to sort of help lend credence or some credibility to this notion is that when you look at from 2005 to 2015, that investors could have avoided 90% of the companies in the S&P 500 index that filed for bankruptcy had they gone out of or sold out of that or avoided that company 5 years prior using ESG factors. In other words, in short, by using ESG data, it could have helped investors avoid some pitfalls with respect to companies that are filing bankruptcy in the S&P 500. So that said, I know this is a lot of information on driving factors, but I think this is all very important to be aware of some of the trends we're seeing. Looking forward, going back to the heading of trend to truth, I think this is something to also keep in mind. This is from a report by USCIF. That's the Sustainable Investing Forum. It's actually, they're projecting that by 2025, which is just 5 years away, that ESG mandated products will move from a smaller fraction of all investable assets today to about half. And it's a big number. That's a big jump. So will this happen again? I think time will tell. It could be higher, it could be lower. But I think the bottom line that we can all take from this is that there is something significantly happening when it comes to ESG and traditional investments coming together, or clients leaving traditional investments for ESG products for the reasons I just laid out in front of you. Now, as we think about ESG, because I know for many of us, including myself, who have a background in BRI, I think it's very important to pause and just for a moment think about what is ESG. Like I mentioned before, I viewed ESG more as only sustainability products or the E, the environmental component of ESG, but it really is a little bit more than that. So traditionally ESG, as you know the acronym, environmental, social, and governance, you're looking at a mutual fund company or a portfolio manager is looking at a series of securities and deciding if that company that issued the security is doing well, and that's up to their interpretation, with respect to these types of issues, whether it's climate change, whether it's resource depletion, pollution, carbon footprint, right? Social, think relationship, the company and their relationship with their employees, with customers, supply chain. Human rights issues are obviously involved with that. And then with governance, that's internally, right? Well, how is that company doing with respect to board composition, certain data points, such as, even with respect to executive pay. These are some of the ESG traditional definitions, if you will. I would posit to you today, though, that ESG really has become more of a top-of-line catch-all term for non-financial factors. So when you think ESG, it's probably more helpful to think non-financial data. And so when a company or a portfolio manager is reviewing stocks for potential selection to a portfolio, instead of just looking at fundamental, even quantitative factors, now they're looking a little bit more even deeper into, or they could, using ESG criteria at non-financial factors about a company and looking for opportunities with that data. So when you think of ESG as this catch-all term, as an umbrella, underneath there you might find terms that we all know fairly well: building responsible investing, sustainable investing, values-based investing, responsible investing, impact investing. Depending on which firm you speak to, which person, which analyst you speak to, any one of these might be used at any given time under the ESG nomenclature. This, from Crossmark's perspective, is probably the simplest way to look at it for now. All of this is ESG. The question you need to ask is, as a follow-up, is what are the criteria, what criteria, I should say, are the portfolio managers looking at when they use the ESG factors in their portfolio process? Traditionally, again, you see E, S, and G, environmental, social, and governance, in the middle columns. You could sandwich those now also with business or product related criteria, or on the far side of the screen, the community, think of that more as impact. And I'll be brief on this, but I do want to make this clear. It's important to know when you hear ESG funds, it's important to look at, well, what are the criteria that they are specifically looking at? Is it business related? Are they avoiding companies that are in the business of certain products or services, alcohol, gambling, tobacco? This is traditionally where we see BRI. Environmental, social, and governance, we just discussed that a moment ago, but here's some examples and bullet points for you. The community, which again is impact, you might want to think of that more as private equity. It's usually more private equity. It's often focused on you're wanting to make a difference within a more of a localized need, and obviously the term community. So again, ESG criteria can really be all 5 of these. They could be a mixture, they could be one. The next thing you want to ask about when we're thinking about a mutual fund company or portfolio that says they are an ESG product is then realizing, okay, once I know the criteria they're looking at, how are they using that? What is their approach to implementing that data into their investment process? So what you see here is sort of a stepwise diagram here showing you at the very bottom, really in a foundational element, exclusionary screening, where you're avoiding, right? Many of us already know this concept. You're trying to avoid something that conflicts with one's values. That could also not just be values, that could also be risks. You know, for example, a company could exclude, when I say company, a portfolio manager could exclude companies that issue stock that score very poorly with ESG factors, and they're avoiding that from a risk perspective. That's also exclusionary. Inclusionary, you want to think lean in, right? You want to think now the portfolio manager is using the data and they're going to maybe rank by ESG ratings or rankings, and then maybe they'll, like I said, they'll eliminate, or they'll keep all of their possible securities that are in a certain sector, for example, that have rankings within ESG factors, might keep all of them, but they'll allocate more toward those companies that have higher ESG ratings. That's an example with inclusionary. You're trying to lean into something. With integration, and this is very important, I really hope everyone gets this one. We hear ESG integration, generally what the fund manager is saying is that they are not as interested in the social impact, they're interested in returns. The primary driver for ESG integration approach is that you're trying to identify and avoid risk and find opportunity for outperformance. That's the key there. And generally, that's a lot more fundamental research. It's a lot more in-depth. And it's got to be something generally that you see throughout the process, not a step necessarily, but it's sort of throughout the investment process for that fund. That would be ESG integration. Impact is virtually on the other side of the spectrum of integration, where the portfolio manager is interested in a social outcome that's positive or environmental outcome, in addition to or more than returns. It's very, very important to note that. Usually you want it to be equal, but studies have shown that investors in impact portfolios are willing to give up returns for that outcome. So that's impact. Again, with impact, you want to think more private equity. that tends to be more project specific. And so that tends not to be as much within mutual funds, although you can have that there. Active ownership, and I'll be brief on this one. This is a little bit different of approach. You're not necessarily picking or avoiding securities based on ESG criteria. Instead, you are now, you look at a stewardship. You're now trying to look at, once you do own securities in a portfolio, how can the portfolio manager on behalf of the shareholders now affect positive change in that company? Proxy voting, right? Shareholder resolutions. These types of activities that can now make a difference, yes, for a social outcome, but also to potentially help long-term performance of that company that they have stock in, because they can see that by making certain changes might really help the performance of that company long-term. So again, active ownership is not necessarily by itself, although you can think of it as something that can trickle down into any one of the lower tiers here with impact all the way down to exclusionary screening. One thing I'll say, and then we'll move on this slide, again, it's important to note, they are not necessarily mutually exclusive approaches. You can have a mutual fund company, an SMA manager who might incorporate more than one, or you might have just one in active ownership in addition to that. So it's important to know that you can have a mix. I think what also might help, I'll pause actually for a second here. Again, if you have any questions on what I just shared, please do email them to the email address that we provided before. But I want to pause here as we go into faith in ESG investing, or how does BRI fit? The number one thing I think you want to walk away with from this presentation, that I hope you do, is that there's a common denominator between BRI and ESG, and it has everything to do with motivation. What is the motivation of the investor? And what is the motivation and desired outcome of the portfolio manager? With respect to faith in ESG, and this is just something very important to me, it's something I've been involved with since I entered the industry in 2008, working on church retirement plans. This is a real ministry, and I think many of you know this. This is an area that I think could be very, very useful and helpful as you deepen your relationships with your clients to explore. Faith with respect to definitions, BRI and ESG, I wanted to show this information. This comes straight from Christian Investment Forum site. What I want to draw your attention to is, again, the definition of BRI is a term used to describe an approach to investing assets in a way that is in alignment with the investor's faith and biblical beliefs. That is a loose term, obviously, for a reason, because there are different ways in which you can approach that or apply the Christian beliefs into a product. If you would draw your attention to the third bullet point here, or the third star, it says the BRI approach to investing incorporates Christian values on social, environmental, and governance issues into the investment decision-making process. Again, just wanted to help bring together the fact that BRI is a sub grouping under ESG. I think, though, the big question to be asking all of ourselves again is what exactly are the criteria and what are the approach of that manager, and what is the desired outcome by investing in that fund? Again, faith and ESG, can you have it? Well, the answer is yes when it comes to taxonomy and categorization of mutual funds and investments. The number one thing, like I mentioned before, about looking at any type of product that has a social, a biblical perspective is going to understand the why. And I think if you're on this Zoom and you are not at all utilizing BRI investments or even ESG investments that might align with your investors' values, even those that are Christians, you really want to understand the why of you as an advisor and your client for looking at a portfolio like this. If your motivation is that you want to align your beliefs with your investments or your personal convictions with your investments, screening where you see values on the left side of your screen, exclusionary screening, even positive screening is going to be a very, very useful approach. Not the only approach, but it's very, very useful from a practical perspective on a portfolio management side. Integration, if your motivation is that you want to outperform, that you want to find ways to mitigate risk within your portfolios, it would probably behoove you to at least explore ESG integrated funds, if that is the motivation. If the motivation is instead you want to, or you believe that by investing a certain way you can make a difference in the world, then impact might be something you really want to consider. Again, be aware that there might be less mutual funds that actually have this type of approach that are available on your platform. But these are just some very important, again, the direction you take, it may not be one, it might be multiple directions, it might be a circle around all three of these. But again, just ask yourself, why are you wanting to invest a certain way, or at least design portfolios in a certain way? That might help you lead in the right path. When you're building a portfolio of BRI products, I want to show the screen. It isn't by any means saying that you have to do it this way. But two sides to this. With respect to the mutual fund companies and respect to financial advisors who build portfolios made up of funds from mutual fund companies, there tends to be a progress or a procedure in which you find that exclusionary screening is still foundational. You'll see that across most, if not all, BRI products to some degree. So I would say that that is something you should expect, and something I think you should probably even want for a number of reasons. And then from there, you tend to find inclusionary, ESG integration, active ownership, and impact. As you're building out your portfolios, I hope this is a useful visual at least to remember, A, what mutual fund companies might be most likely doing, and B, what might help in terms of allocations or percentages of your portfolios and how you might want to spread out the actual mutual funds in your portfolios. That again is just a suggestion. And wrapping up this section of the presentation, maybe this might be some good takeaways for you, but if you're putting this into practice and you really want to start, or maybe you already have BRI portfolios you're using and you want to revisit those, maybe make some changes to them. Three things to know. Again, know your clients, really take the time to discover what motivates them, what matters to them, understand the why, understand your why. You are really going out on a limb in some ways as a financial advisor to promote BRI to your clients, or ESG products mixed into BRI funds to your clients. Understand your why. Know the marketplace. I hope that the slides I presented before were helpful, at least to know some of the trends with regards to flows, with respect to the number of mutual funds that are coming to the marketplace. Understand what's out there, understand what may be some misconceptions, even within yourself maybe, and really get to know the lingo as best as you can. I would also say that what I shared earlier with definitions very well could be different 12 months from now. It's amazing to see how much change there has been. So just stay in the know of terminology and lingo. And thirdly, and this is very practical, know what's available to you at LPL. What products are available to you? What do they do? What type of, again, what type of criteria are they looking for? And how are they implementing that or approaching the implementation of that criteria in their mutual funds? With that, I just wanted to quickly sign off here and thank you for your time. Just to let you know, at Crossmark, we do offer biblically responsible investments for you, both in the SMA format as well as mutual funds. If you prefer mutual funds, we are available on SAM and SWIM as well in an advisor's sleeve. Currently, we do have 5 funds, iShares, that are available to you. If you want just a real quick understanding of steward funds, again, like John mentioned, Crossmark, the manager and distributor for the funds, is closely affiliated with the Assemblies of God. So for more background, the steward funds were initially created and launched for the AG retirement plan back in 2004. So the initial goal was to provide screened funds for pastors and for ministry employees. So because of that, they're also designed with asset allocation in mind: large cap, mid, international, global, and a bond fund. In case you're wondering to know more about exactly how we screen, again, I'm happy to share more details maybe after the call, but for now, it might be helpful to note we do stay in that exclusionary screening foundational section I mentioned of approaches to ESG criteria or BRI criteria. We do screen out for 7 categories. You see some images there on your screen, but that's going to be alcohol, tobacco, gambling, cannabis, mature or adult entertainment, mature content, abortifacients, and embryonic stem cell research. Again, happy to explain more maybe on another time. But with respect to SMAs, I don't know how much you might be utilizing SMAs within your practice, but I think among the other BRI fund families, we might be one, if not the only one, that offers an SMA product or a lineup of products. You're going to see here some overlap, like a global equity income. But again, just for a quick overview, there are 8 different strategies that are available on Manager Select that we provide. And please note that if you do want to offer a BRI or a mix of BRI and traditional ESG screens, we can actually do that, one or both, within an SMA format for you. I'll be brief on this one. Again, I mentioned our affiliation with Assemblies of God. At Crossmark, we take it very seriously that we're not just stewards of our clients' wealth, and we want to be good stewards of that, but we also want to be to have integrity and exhibit our core values, which are listed at the bottom of your screen there. And we also take time to invest into ministries. You see some here on your screen right now. One thing I just want to share, I'm really proud of. Restoring Justice is a recent organization in Houston that we support. We actually had a very successful fundraising venture recently in which we donated a significant amount to Restoring Justice. That is a ministry that is focused on helping the targeting and helping people who are in prison receive the right amount of counsel and help that they might not normally get because of economics. So that's a social, you could consider like a social justice sort of ministry. It is founded by Christian beliefs and a Christian organization, but that's something we recently started helping out with, so I'm very much proud of. So with that said, I think I'll just pause. I want to thank you again for tuning in and listening to the information I had to share. And I'm going to turn it over to John, in case you'd like to help here with asking any questions that may have come through. I'll try my best to answer them.
Sure. Well, Jordan, first, thanks for sharing today with this group. If you do have a question, please do email it to that email address that Jordan is sharing on the screen. And before I jump into any questions that may come in, let me get started, I guess, with a couple of things. And the first one is really to sum up the presentation. What would you say you would want the folks to come away with as the key takeaway from your talk?
Yeah, thanks, Sean, for that question. I would say that now more than ever, with the rise in ESG investing and popularity, clients are wanting to invest in a way that expresses their values, what matters to them. And so this is, if there's ever a time in history, this is the time to be asking your clients what matters to them and expressing to them what you feel maybe they should be considering with respect to values.
Terrific. Yeah, I'd like to go back a little bit to one of the points you made in the presentation, which is talking about this big space of ESG investing and how large it is, how large it's going, what the trends are in that space. And you mentioned it as an aside, almost like that BRI is kind of a niche within it. And, that is one thing that our goal, our desire from the beginning of Christian Investment Forum and now even into Faith-Driven Investor is it should be the other way around, right? So if 70% of the U.S. is Christians, even nominally, then BRI should be the big picture, 70% of the assets, and ESG should be the smaller one. And I think there's an opportunity for leadership in that space because there's so many new products out there that are good, high quality products that follow Christian values and ethics and how they invest the dollars. That I think there's a real opportunity there, but we are not there yet. And so I guess one question I have is, given the strong interest and visibility we're seeing with ESG investing in the population as a whole and millennials more specifically, how does that open the door for advisors to introduce a Christian ESG investing or BRI to clients of all ages? And maybe you can share, given your experiences talking to many advisors.
Yeah, no, thanks, Sean, for that question as well. I think the first thing that I would share is that, well, I guess first of all, before I answer your question, I was thinking of something that you had said. One study I saw showed that 6 out of 10 financial advisors in the U.S. are already using some type of ESG product, whether it's passive or active. And now that includes exclusionary products that tend to be more like BRI. But that's an interesting number, and that's expected to go up. So I think just even from a strategic, somewhat temporal perspective, and just being shrewd as snakes and innocent as doves, just being aware that other advisors are also talking about ESG overall, right? If not mandated by the broker-dealer that they are with, or if they're more of an independent, it might be coming up from even asset managers, and so it's becoming more and more common to have the conversation. I think with respect to BRI, I think that it is very important that financial advisors take the initiative. And forgive me, I'm going to be careful. I've not been in your shoes per se, but I think have the courage to lead with your clients into the conversations, and be vulnerable. Be willing to express your faith journey, what has led you to Christ, what has led you to viewing money the way you view it. With King's Advisors, that's a very big part of what we're all about. But I think it's particularly with ESG and some of the trends that we're seeing, I think now this is very, very important of a time to be asking questions. One thing, John, I'll share, we try to do what we can as a money manager. I know there are several other BRI fund families out there that we partner with that do something similar, but any resources we can give or provide, we want to do that if it's going to help the conversation. We do have a questionnaire that we designed not long ago that is something you could potentially provide to your client and say, here's just a few different issues. Do you mind just circling or checking, or just maybe think on it, come back next time, tell me what might matter to you a lot, or what resonates with you. And in there, we include issues that are very relevant to the Christian lifestyle in our walk with Christ, but also other things too that I think that are Christian, but we just don't typically think them as such. So that's a tool and a resource, John, we'd be happy to provide. If anyone wants to provide an email address, we can get that out. Yeah, that's it I'd say for now.
Terrific. Yeah. Well, and I'd say, right, that the groups like this one that we're talking to today, this is another source of support, encouragement, sharing best practices, what works, what doesn't work, in the whole process of trying to grow this space. I think we have this wonderful opportunity because clients, investors are talking about ESG, that the door is if not slightly open, it's half open to be able to have a conversation about ESG, even if it is a Christian ESG approach to that. And the same things that hold true in terms of strong some strong return research on return fits just as easily in the Christian ESG or BRI space as it does on the broader secular side. So
yes, sir.
Let me ask a question kind of along that line.
Yeah.
I know you guys have actually done some thought leadership in this area back in 2018, and these are things that are available on your website, but perhaps if people were interested, you could share it with them directly. You guys did a survey of investors, I think maybe even high net worth investors, on the topic of Christian values based investing, or BRI. Can you share some top level insights from that survey?
Yes, absolutely. So in 2018, we did conduct a survey. If it's okay with you, John, I'm just going to quickly just show it so people can see it on our website. Actually, you know what? For the sake of time, I won't do that. But I'll just express this. There were basically 3 takeaways from a survey we did. And one was, how familiar are investors with terminology like responsible investing, values-based investing, ESG. What we found was that, probably not surprising, that typically the younger the investor, the more they were familiar. And what we thought was very interesting is that most of the wealth is still with investors who are more advanced in years and that have had time to accumulate wealth. So we thought how interesting of that. It's sort of an untapped market. What our study showed was just about 33.8 trillion is a number that we actually found through USCIF. that is a bit of an untapped market for investors, or really for advisors. So I say that carefully, not to sound in any way greedy, but to just be aware that there's a large number of investors out there still, regardless of their age category, that could use more education and could probably use some help with understanding what's available to them, and including those that might be baby boomers or another generation. The second thing is there's 3 takeaways. The second thing, and I'll be brief here, is we asked what do investors value the most, and of the top 5 categories, what ranked the top 3 I'll share for now was healthy living, and actually that was pretty much across the board, except we broke down by millennials, middle aged, and then by seniors, middle aged meaning actually baby boomers. But healthy living was number 1. The second was religious or biblically responsible investing. That was number 2. The third one actually had to do with the environment and the carbon footprint and just trying to be a good steward of the earth. So those are the top 3. And then the third thing we asked was from the survey correspondents, we asked them, basically, how would you like your advisor to broach this topic with you or to engage you about values-based investing? And by and large, the vast majority of them said in person. Still, I know right now with the way the year's gone with the pandemic, that might be harder for some more than others, but that face-to-face conversation was key. But after that, they appreciated really any engagement with phone or Zoom. And so those are just some of the three takeaways that we want to share with the advisors.
Great, thank you. And I know that information is on your website. You also have some other great studies and research that you guys have been doing over the recent years about kind of connection, alignment between advisor and an investor in terms of their religious values and beliefs and how the relationship gets built. But all of that stuff is available. I think there's a plethora of research there on our website and on the Faith-Driven Investor website, certainly, as well as others who are in part of this movement that the Christian Investment Forum is a part of. So I think we're out of our time this afternoon, so I want to be sensitive to the days of everybody and the number of Zoom calls that everyone seems to be on these days. So I want to thank you, Jordan, for participating, for sharing some of the insights coming from Crossmark Global. If you want any more information from Jordan, certainly send an email to info@christianinvestmentforum.org. You can reach him directly at Crossmark at their website or through the LPL-KA study group. As a closing, a reminder that I think our next call is scheduled for November 18th, the same time. And the topic right now is the plan is to how do we now take some of this information, how do we develop portfolios that are BRI portfolios from the products that exist from the various players in this space. So getting more towards some more practical knowledge of how do we take the next step into doing these things and having somebody sharing a variety of ways that can happen in a really well diversified portfolio that can really provide a good return. So with that, let me close this with a real brief prayer. And again, thank you for everyone's time and for the leadership team, Ward, Aaron, and everyone else at LPL for continuing to make this available to so many of us. So let's pray. Thank you, God, for this opportunity to spend this short time with like believers in you. Help the words that Jordan shared, that everyone shared today, be a blessing to those who are on the call, that prick our hearts and move us in directions that you guide us in, that we are moved into. Encourage us together to continue to glorify you in what we do and what we say to our families, to our clients, and to the world around us, and take us from this day and protect us as we go forth in your Son's name. Amen.